Hello traders, good morning, good afternoon, good evening, bonjour, bonsoir mes amis, guten Morgen, guten Tag, guten Abend. For those of you who are new to us, we are the TSTW SYS008 traders. And for general trading, our website is www.stochasticmarket.com for Elliott Wave trading, www.24elliottwave.com for advanced trading, www.dayprotraders.com. Today is the 27th of June 2014, and the time in London is 13:45 p.m. in New York, or 8:46 now 46 a.m. And the title of this video is how to swing trade on a daily chart like a pro. How to swing trade on a daily chart like a pro. All right, let's get started. A lot of swing traders like to use the daily chart, if they are swing trading. And many of them do not go and look on the weekly chart or monthly chart, quarterly chart, or the yearly chart. Most of the daily swing traders will be looking for chart patterns, on a daily chart, head and shoulder pattern, inverted head and shoulder pattern, round pattern, all sort of chart pattern on a daily charts. Some of them will also be using the stochastic oversold. Some of the swing traders will be looking for opportunity to buy. Stochastic is overbought, and some of these traders will look for opportunity, to sell. There are another group of traders that will use the volume indicator, to swing trade on a daily chart. In this video, I want to share with you a specific swing trading, on a daily chart that trader can learn and put into use. It is about the market stable data. So whenever you want to day trade or swing trade or invest, you must use a market stable data. The market stable data, these are things that remain intact in this messy market. Traders that are following us understand this already, so I'm saying this for traders that are new to us, So the market stable data that I'm using here for this swing trading strategy is this, that if the price breaks above a key levels, very often, the price will like to retest. The validation of support and resistance level is the key to successful trading. Price break above a resistance level, the price want to convert that resistance level or validate that resistance level as a support level. This is the market stable data. This is true on every time frame. All right. So the inverse is also true. When the price D below a key level or a very important levels, the market would like to confirm that the price D below a support level, very important support level. The market would like to convert or validate that support level as a resistance level. So break below, retest, turn around. This is the market stable data that we're going to use, a swing trade, So maybe you already know this, but I recommend you to stay with us, as you will be shocked about what I'm going to share with you now, and you'll be wondering why you didn't see it before. All right, so stay with us if you are a swing trader or somebody who like to learn to swing like a pro. All right. The strategy that we're going to discuss today, the swing trading strategy that we're going to discuss today, one will apply it on Tuesday only. All right, remember. So on Tuesday, professional swing traders very often will apply this strategy. Why? I will explain it to you. So Friday is the last day of the week, yes or no? And traders that are following us, we talk about how to day trade, on Fridays, We also talk about how to day trade on Monday. So Friday is the last day of the week. Monday is the first day of the week. what has happened on Monday is likely to happen at the end of the week. Portfolio adjustment, profit taking, okay? All these things happen on Monday and also on Friday, okay? So I don't want to, okay, dwell on this subject about what is happening on Monday, what is happening on Friday. But I will recommend to traders to watch the video that we call how to day trade on Friday, how to day trade on Monday at www.youtube.com/George Trio. Subscribe to our YouTube channel. We have 3 YouTube channels, okay? So this video will be posted at Day Pro Traders channel, okay? So now, this strategy, we will use it on Tuesday, okay? So I draw some line here. We are looking at Coca-Cola stock, okay, on the daily chart. Daily chart, very important. And I draw a vertical line here. I want you to focus on the top left-hand corner where I'm rotating my cursor. Keep your eyes there because I want you to see the day that I'm highlighting. This candlestick here. Pay attention to it. You see here, Monday, the 6th of Monday, June 23rd, 14. The 6th represents June 23rd, 2014, Monday. Can you see on the top left-hand corner here? Did you see it? Okay. Did you see Monday, the June 23rd, 14? So this is the vertical line is Monday. So this is Tuesday. So on Tuesday, professional swing traders usually come into the market. Most professional swing traders do not, the best professional swing traders do not place a trade on Mondays. Because they know what is happening on Monday, they just watch the market. They may day trade, they may do other things, or if they open a position, they will be prepared to grab their profit. They are waiting for Tuesday. You understand? Tuesday. Right? So on Tuesday, look at this. This is this week. So Coca-Cola. So you remember the market stable data. This is what you don't want to forget. You want to build a trading system. You want to build a trading strategy. You have to build it with market stable data. If you build a trading system based on indicator alone, you will go round. So look, the price break above this red horizontal line, you see on the daily chart, is a very important level. You see. See, it was a resistance level, price went down. Okay, price went above it, come back below it, retest it here. So the red horizontal line we are watching. So this, you see here, the price break above this red line, which is a key level on the daily chart, a resistance level. You remember the market stable data, break above a resistance level, validation of support and resistance level. This is what we are working with. But we want to use this strategy, which day? Not Monday, not Wednesday, on Tuesday. Okay? So we want to do it properly because sometimes traders go around, they will download free trading system. Sometimes the system is not properly written or there are some information missing and they just use it. Okay? You want to do it properly. Okay? You want to do it properly. Follow the correct things. If you are using it, use it properly. If you are modifying it, define your own rule. Okay? So price break above the red horizontal line, and look what it did. You retest it on Monday. This is the Monday. If I move on my vertical line so you can see the candle of Monday properly, see here? It's the candle of Monday. So you break above it and retest it. You will see this very often on Mondays. Market will pull the price back nicely because it's adjustment, market portfolio adjustment, market adjusting itself. Traders are adjusting their portfolio, preparing themselves for the week that is beginning on Monday, looking ahead, okay, the economy news, the fundamentals, okay, and also checking what has happened on Friday. So market cap open on Monday. People are watching what has happened on Friday. Where are we going? What do we want to do? The market is always going from A to B. So this is the candle, the red candle here is for Friday. So the market was going down. So it broke above it, was heading down, but couldn't retest the red horizontal line. So on Monday, which is this candle here, I'm going to put back my vertical line soon. The price opens here, and what it did, it went to retest the red line. And from there, people bought it straight away. But remember, the best professional swing traders are very patient and agile. They don't fight the market. They don't rush. Okay, they don't assume anything. They just stay calm. They want to catch it, and they want to catch it at the right time and also at the right place, which means best price level. So on Tuesday, what you will do, okay, you highlight. Now you get a picture. So we are all singing the same song now. You get to the picture now. If you are following now, you get a picture. They will highlight the high, the low. So I don't want to draw another line at the low because the red line is almost at the low of this candle Monday. And they will also draw the median line of the candle of Monday. And then we'll be looking for opportunity to buy near the median line, okay, of Monday candlestick bar. So Tuesday, they are looking for opportunity to buy on the edge. The edge, in fact, is the retesting of this support level. This resistance level is now validated as a support level. Prior retested, and boom, went back up. Now the following day, which is Tuesday, swing traders, TSCWSY's usual traders, may look for excellent signal on the signal time frame and swing it. And this is what has happened here, and it went up big time. All right, let's drop to the 30-minute chart and see what has happened around this level. I'm going to put my vertical line there, and I'm going to go to the 30-minute chart, and we're going to zoom into what has happened. Remember, the spotlight here, this is a Monday, okay? All right, Monday, okay, right here, and this is Tuesday, and Monday is this session here. Tuesday the 24th, Wednesday the 25th, and Thursday the 26th. Now, because I'm using stock, the time in London, though today is the 27th of June, the stock market in New York is not yet open. It will be open at 2:30 p.m. London time. So if you look at the time here, it's 3 minutes to 2 in London. Okay, so in exactly 33 minutes, the stock market will open. So though today is 27, we haven't got the section for the 27 yet. All right. So look what the price did, in fact, okay? On the 30-minute charts, okay, on Tuesday, all right, which is the 24th, we're still here. No, Tuesday, right here, the price closed up here. But look what's happened. So you can see clearly here, this candle here, this is Tuesday, you see. On Tuesday, the price pulled back, okay? So the price was below this trend line on the 30-minute chart, and it pulled back here a little bit. But look again, it retests the same level and display a double bottom pattern. So if a level is validated as a support level, if pay attention, if a resistance level is converted into a support level, we are likely to see, okay, what? Bullish chart patterns on the lower time frame. Now let me say this again. If a resistance level or price break above a resistance level, and that resistance level is truly converted into a support level, we are likely to see on a lower time frame, okay, valid, okay, bullish chart patterns. You can see here we have a kind of, okay, a double bottom chart pattern on the 30-minute chart, and from there the price starts running away. The trend line is broken, and we have a double bottom pattern. This is confirmation to us that this red line is now converted into a support level. Let's move on, ladies and gentlemen, because we don't want the video to be too long, okay? I'm going to go back again to the daily chart. So we finished before Coca-Cola stock on a daily chart, talking about how to day trade, how to swing trade, my policy trader, how to swing trade on a daily chart like a professional swing trader. All right, we want to understand what's going through the mind of traders. On Friday, okay, there is a portfolio adjustment, profit taking, all sort of activity, which I refer traders back to the video that we call how to day trade on Friday, how to day trade on Monday. Same thing very often will happen on Mondays. So after the adjustments finish, the market is now ready to start a new move, a new cycle, a new trend. Okay, so on Tuesday, a smart swing trader will come into the market looking for opportunity to buy on the edge or sell on the edge. And they will highlight the high, the low, and the median line of Monday. But they are checking also the risk-reward ratio. Sometimes you may look at it and the risk-reward ratio may not be suitable to you. So you may walk away. Don't use this strategy like 1 + 1 = 2. You are the decision maker, okay? And money is involved, okay? So don't use it like 1 + 1 = 2 is always like this. Use the trading triangle, pay attention to the economy news, check the fundamental, do not swing trade. All right, there are videos we have already posted. I'm saying this to new traders. All right, so don't swing trade using the technical alone. All right, moving on fast. The next financial instrument that we're going to look at is Nike. Okay, if you like sports, okay, Nike is here. Epic November Kilo November Kilo Eco, okay, NKE, all right, listed on the Dow 30. We go into the daily chart. We are already on the daily chart, and you can see the vertical line here is highlighting Monday, okay. Anytime in this video you see the vertical line is highlighting Monday. If you pay attention again to the top okay, left-hand corner, you can see 6 MON 6 2314, which means Monday, okay, June 23rd, 2014. Looking on the top left-hand corner of my screen, okay. So here again, this is Monday. Now, which you look carefully, you understand the market stable data that we are using. This is another key level here. Price retest here was bouncing, in fact, consolidating around the pink line. Right here it is. You see, in April, this is what was going on for this Nike stock. And finally, what has happened here, the same market stable data, that if the price break above a very important level, there's a high chance that the price may like to validate it. The market may prefer, when we are talking about the price or the market, we are talking about market participant, okay? So here we are again. The market has retested that pink line, went up a bit, but couldn't continue the move. But look, again, it came back again. You see here, it went above the pink line, yes or no? Okay, let's remove this one here, and which are Nike, okay. So the price, okay, you can see here, break above the pink line, retested D below it big time. So did not validate that pink line straight away. You can see that D below it crashed through it. So market was very anxious, and so they rejected this as a validation. You can see what's going through the mind of traders. So it break above, it retested, but crashed through it all the way here. So people are wondering what kind of validation is this one. So they push it back again, so it went up big time with this top candle here. So they want to validate again. They want to push it down. It's very important. They want to check again whether it's valid, the support level now again. So now after that, they retest it, which is this candle here is Monday. So on Monday, remember, you would draw again. Let's move the vertical line to the side. You draw again the high, the low, and the median line of what? This candle bar, which is Monday candle bar. And you'll be looking for opportunity to buy on the edge or, okay, at least above the median line of Monday. So this is the high and the low of this candle of Monday. And the median line is somewhere below the pink line, somewhere here. So in fact, if I do it quickly here, using the Fibonacci retracement level to highlight the high, the low, and the median line of, to highlight the median line, the 50% the Fibonacci retracement level, in fact, is just above the pink line. Okay, all right, it's above the pink line, just above it, nicely, sitting on it. So if you accept that, if you can replace the 50% level with the pink line, you can see here. So on Tuesday, so we have the high, the low, the median line. If you accept the pink line in the zone of the median line, you will be looking for opportunity to, okay, If you see on the lower time frame, TSTWSY is 008 traders, signal time frame, look for bullish chart pattern, okay, and trade like professional traders on the edge, okay. So again, you can see it break above the pink line. So first time it break above it, but crash through it. People wonder what's going on. So they want to retest again. Here it went beautifully. It went below it a little bit, but not too far. But close now, you see, close above it nicely, displaying this hammer. The following day, you can see that people bought it straight away, but sellers sold them down. You need to be patient. On Tuesday, be very patient. Don't rush, don't rush, don't rush. Okay, be very patient. But you want to highlight the high, the low, and the median line. Here, the median line is here. You can, if you receive a buy signal here, you will take it. Look what has happened. This candle close, so one up, one down. This is a. You will also look for, okay, a candlestick bar on Tuesday. Sometimes you may see the best a candlestick bar, okay, patterns, okay, on Tuesday. Okay, so the candle of Friday and Monday may display a beautiful candlestick pattern. All right, so traders are watching. So now you see this is Tuesday. All right, one down, one up. This is a candlestick bar, candlestick pattern, one up, one down. So the following day you see here, trader understand the language and look, a tall candle like this, beautiful. You can swing trade in one day. Look, a tall candle like this, what you want? Take your profit and go. All right. So this is again, this one here is Tuesday, and the market stable data that we are using, breakable, retest, and validation of support and resistance level. On Tuesday, we are waiting for it, and we are taking in a professional trader. The best approach, so you watch this video, okay, you say, George, I like it, understand it, it makes sense to me, okay, I'll try it, okay, try it, test it, okay, retest it, okay, retest it, okay, use a demo account, retest it, and master it. The first time you may try it, some people, it may work beautifully. So I may receive a beautiful email and you say, George, you are the man, okay? I like that, okay? But don't stop there. Keep testing it, okay? Own it. Okay, so you try, you say, okay, what have I done wrong? Okay, maybe it didn't work the first time. What should I do? Okay? Okay, should I be patient? Should I wait until London is closed on Tuesday before I place my swing trade? All right, or is it my stop loss? Okay, it's not suitable to my risk tolerance. Okay, or is it a financial instrument that I'm trading? Okay, have I missed the fundamental, or I forgot to check the economy news? Okay, so work on it. Okay, train your mind. Okay, to apply this strategy. All right. The next financial instrument that we're going to look at, okay, is right here. Also listed on the Nasdaq is the Walt Disney. All right. Again, I have two lines here on my chart. Okay, so as always, the vertical line represents Monday. So this is this week that is going on. So this candle here is Monday. Okay, Monday. So again, the same. You remember the market stable data that we were applying. Okay, pay attention. The same scenario that we see earlier is happening here again. Okay, for Nike, the same thing is happening here. Look carefully. This is what I said to you. Work with a market stable data. Price break above a key level. Which one? This one. It's a resistance level, yes? The market would like to confirm it as a support level before bringing it up. They don't want to push it up if it's not a valid support level. All right, validation of support and resistance level is the key to successful winning trades. So now, they retested here. It worked beautifully. And this is a candle. This candle here. If you look on your the top left-hand corner, Monday 16/14, Monday June 16, 2014. That's the first vertical line here. The first one here. It's a Monday. So on Tuesday we will apply our strategy and swing trade. Well, it worked beautifully. It worked, yes or no? Break above, retest, turn around. Here it worked beautifully for a few days. Now look on the top left-hand corner, Friday. You remember what I say on Friday, people take profit, portfolio adjustment, they bring it down completely. They give it back. Everybody took profit. Swing traders, everybody took profit. price went down, okay? You will see that sometime, okay? Friday, people take profit, okay? They secure their gain, they do all sorts of things on Friday because, okay, the week is closing, and sometimes people do not want to remain in the market over the weekend, so they do things, all right? So this is about how to day trade on Friday. Check that video. I discuss okay, everything there. So here we are. So the price crashed back down. Second, validation. Price pull back again to retest which level? The same resistance level. You remember what I was showing you before, okay? For Nike store, we see that. So first time validation, second time validation. This is beautiful. They display double bottom, in fact, here. After breaking above the key level, the price display double bottom. It's beautiful here. So this is Monday candle. Look, Tuesday. We will highlight the high, the low, the median line of the candle of Monday, and we will be using the TSWSY08 for swing trading on Tuesday. Or we'll be looking for, okay, bullish chart pattern on a lower time frame to confirm that this level is now validated at, okay, a support level. We want to make sure that we enter the market at the right time, checking the fundamentals and economic news. If you are swing trading, all right, this is one thing you want to work on. I've seen traders, okay, I'm trying to encourage traders here. I've seen traders that are swing traders. And one of the mistakes that they were making is that they swing trade, and for one reason or another, they don't want to know about Google for now, they don't want to know about Yahoo for now, they don't want to know about the Forex Factory. But I've seen the changes when a trader, traders who were not paying attention to the trading triangle start doing it. And I noticed that there was some improvement, okay? These people start seeing that the importance of the economy news and the trading triangle. So I recommend to traders do not use the technical analysis alone, combine the technical analysis with the fundamentals. All right, very important. Okay, so now, okay, are you with me? All right, if you like the video, okay, give us the thumbs up. If you dislike it, put it down. Thumbs down, we want to know whether you like it or dislike it. Put your comment below. This will help us, okay, to improve, okay, our recordings. Let's continue. So here, the second candle, again, this is Monday. So on Tuesday, we'll be looking for opportunity to buy, validation of support level if everything aligns for us using a top-down trading method. So this will be our setup. You remember the trading drill, the setup, the signal, and the low-risk entry point. Hey, this is what we are doing all the time. The setup, the signal, and the low-risk entry point. This is the trading drill. Now we use another triangle. The market first, the sector before the individual financial instrument. The heart of the trading triangle, okay, the market leaders, the fundamentals, and the economy news. Multi-talented trading, okay? All right. So now, this is it again. It worked beautifully, yes or no? On Tuesday. So this is a Monday, so you will draw your line like this. Highlight the high, the low, and the median line. And Tuesday, you are watching it carefully. Don't rush. Be patient. Be patient. Let it align for you beautifully at a low risk entry point. As a swing trader, you're going to need, okay, a bigger stop loss. So you will be looking for the best entry point on the edge. All right, that's what you want to do. All right. So sometimes you may enter a trade, be taken out, but because you were trading on the edge. All right, it's not a big deal. All right, the risk that you were taking was not too big. But if you just jump on it, or force it, without using the trading drill, then you expose yourself to much, and they will take a big chunk of your trading account, which you do not want. Okay, you need your money to trade with. All right. So it worked, yes or no? Okay. On Tuesday again. So break a ball, retest, turn around, validation of a support and resistance level, okay. The inverse is also true if you want to sell, okay. We want it to break below, so break below key level, retest it, okay, and then we're looking for bearish chart pattern on the edge of the support level. So price D below is support level. Now we are looking for, okay, the validation of that support level as a resistance level. Once the validation is confirmed, how? You will see a bearish chart patterns on the lower time frame. You will see them. A violation of, okay, a market pattern, okay, the current market pattern, all right? So these are the things we are looking for. All right? The next financial instrument after, okay, the Walt Disney is Boeing. okay? BA. Not British Airways, but BA as a Boeing Epic Bravo Alpha. Okay, again, the vertical line here represents Monday, okay? And the key levels that we want to watch is the blue line here. So in fact, I'll color it now in pink. All right. Here we are, you see, this level here. But if you pay attention, the best key level is this one here, all right? This one. The horizontal line here, you see? Touch it, come down, touch it, come down, touch it, come down, touch it, come down, touch it, come down. Now, but if we are, for instance, I extend this peak line, extend it, extend it, extend it. Am I correct? Okay. You can see that the price was in fact oscillating between the gray line and the peak line for a while. It went above it, blah, 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 around that zone. So we can say that this also, the pink line is also a key level because it's the top of this consolidation. Okay? All right? But this time we want to talk about a sell signal. All right? A sell signal. So the vertical line is about a Monday, so pay attention to the top left-hand corner. So Monday, June 23rd, 2014. On the top left-hand corner of my screen, right here, this section here. Have you seen it? You see now, Monday, 6/23/14. All right? So here, this is a Monday candle here. So look what the price has done, okay? This time, what do we see, ladies and gentlemen? The price D below the pink line, okay? I want to show you there are two things here trader will see, and the first time he retested here. Now this where the price was, so a D below it and retested. We are using this market stable data. You remember what I said to you at the beginning of this video? The market stable data that we are using for this swing trading strategy. So this is Friday candle. If you look on the top left-hand column, so it retested already on Friday. So in fact, it break below that resistance level, and that resistance level was confirmed as a resistance, that it break below. This is a support level. It break below the support level. The pink line here is a support level. Break below the support level, retested the support level, and the support level was already confirmed as a resistance level on Friday, and people sold it down. So the price went down. Okay. So on Friday, so we want to stick to our strategy. So this is the candle for Monday. We want to enter the market. Though the price was going down big time, I will be cautious here because why? This Tuesday happened to be near a support level here. You see here, this support here, this the one. You see, it's a support level. If you draw a line here, you will see that there's a support there. So our strategy in this case, we will be wondering what George is talking about. Shut up, George, or something like that, or banging the table, all right, or something like that. So now you see, so this is a support level price. Test it and go away. So Tuesday is this candle here. The vertical line is Monday. Am I talking to myself? So you see here, this is Tuesday. So on Monday, the price was coming near support level. So I'll be wondering, okay, if I want to sell, I'll be very careful. I'll say, I don't want to sell into a support level. I will prefer it, so I will say, I will prefer it to D below the support level, see the green line, and to retest it, then I can sell it. All right? But look, something else has happened, okay? So on Tuesday, this is the candle for Tuesday, you see? The candle for Tuesday. Because the price went down too far, the market did open here, all right? So you highlight the high, the low, and the median line of Monday. Now, by the way, this line here, I'm going to color it now in turquoise, okay? Is the median line of Monday. This is the median line of Monday, okay? So Tuesday, as the market did open here, the market, because they want to sell, remember, they want to sell. So they bring the price up first to retest the turquoise line. This is this week here. Can we go now on the hourly chart, this time on the hourly chart? Okay. Remember, Tuesday is the 24th of June, Okay, you can see here it is, 24th. You see here, Tuesday. Yeah, 24th is Tuesday, okay? So here we are on Tuesday. The market did open here. And look what it did. So price went down. This is, those who understand area way will know that there's one more leg. The minimum price move is what? Free. So price, there was a validation of a resistance support level as a resistance level. So this support level is now converted into a resistance level. Price rolling it down. Minimum price will you roll it down fast like this and then pull back to retest it on Tuesday. Here it is. You will look for, you will sell here, provided that the common central line, or if it's a triangle you see, okay, it's out of this triangle here. That's it. But then, because you are very close to a support level, you see some trader came here, I will be willing to come out. That's why I said it's a bit tricky here. There's a support here. So if you sell it like this, and you know that you are very close to a support level, as soon as the price, you see now it went down near the support level, if you do not want to come out, move your stop loss to break even or reduce, okay, your risk exposure. It's a bit a tricky one. All right, but it went beautifully. Some people came out here, they traded, and then it just crashed through it and then ran down. Now it's changing direction. Minimum price move is free. All right. Okay. Traders that are also using the 24SP30 material, the 13 specific slow stochastic pattern. Stochastic is overbought, display low that is not in oversold zone, followed by another low that is now in oversold zone. If you combine that stochastic pattern with the zigzag pattern, you are likely to make excellent swing trading decision using the 24SP trading material. All right, I don't want to dwell on that. So you see now, this is one example of swing trading. This time we are bear, we are selling, okay, the Boeing, okay, on the edge of, okay, this the media line of Monday. The media line of Monday is this turquoise line here. You see, the price has retested the support level, so it's deep below the support level, and retested here. You remember the market stable data. We want the support level to be converted into a resistance level. Yes, it moved down first time. We want it to rally up a bit. Now where? We were on the edge. Now it comes to the edge of the median line, which is also a kind of, you see this level here, okay? And it went beautifully, okay? All right? It makes sense? The next financial instrument is JNJ, Juliet, November, Juliet, a bullish cow. All right? So if you are selling stock, okay, what I say to my friend is that do not sell Johnson & Johnson. It's a very, very bullish financial instrument. All right? Stay away if you are a bearish trader from Johnson & Johnson. Okay? All right? So again, we have here another vertical line which represent, okay, Monday. Let's see. Look on the top left-hand corner. So Monday 6/16/14, Monday June 16, 2014. Okay, at 3 p.m. Okay, here we are. You see, that's the vertical line here. All right. So what is happening here? Okay, remember which market stable data are we using? Okay, whenever you are trading, ask yourself which market stable data am I using? Okay. You need to base your decision on the market stable data, and to avoid making a lot of crazy mistakes or to avoid distorting the market. All right, too much distortion will create a market crash. Okay, sooner, okay, than later. You will see very often when the market is distorted over and over and over by the market participant, all right, greedy market participant. Over time, we have what we call a sharp correction, and everybody say, "Well, the bearish sellers," but it's not a bearish seller. It's just accumulation over time of distortion. The market couldn't cope anymore, and they bring it down, and then people blame somebody else. Okay, so that's why traders must understand the market stable data to avoid, okay, distorting the market, so we can have an orderly market. Okay, an orderly market. Okay, don't force it. Okay, I know people are forcing this market every day, and they should stop doing that. Okay. So here we are again, the key level here. See, so okay, it's a resistance level on the daily chart. So in fact, the market was acknowledging here, you see, consolidating. Now finally, people were selling here because they want to sell, but the smart money want to sell here, so they push it down. But again, people blah 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 blah. So this is a resistance zone. Market was acknowledging it here, also acknowledging it here. After again acknowledging it here, but finally we went above it. Okay, so we were in a resistance zone. So now the market finally went above it, okay, on the daily chart. Now, my apology to traders. My apology to traders. I'm on the hourly chart. Why don't you say it? Yes, we go back to the. Let's go back to BA and see whether. Yes, on BA, that's correct. We were on the daily chart. You see, that's correct. And now we are looking at J and J, and we have to go back to the daily chart. Now we are now on the daily chart. Okay, so the key levels here, you can see clearly. Okay, the resistance, touch it here, come down, try to go up, couldn't, went horizontal. Finally, it break above it. Validation of support and resistance level. Now we are retesting. This is the Monday candle. So you will do that. You draw your line. You see exactly what just said. I don't think they always do that. Okay, let's see this, whether this just trio strategy is working or not. Okay, so you highlight the high, the low, and the median line, and then you'll be watching it. Break above and resistance level, retest it. You are looking on Tuesday. This is the candle for Tuesday. You are looking for bullish chart patterns on the lower time frame. Okay, or you will be using the TSCWSY's usual 8 trading system if you are one of them. Okay, or you use your own swing trading system. Okay, here we are. Bam. Okay, you may also pay attention to the candlestick bar. You can see that the price went down, boom, boom, boom. You see this bearish candle, but now we have indecision. As the price was approaching the support level, okay, doji, indecision, followed by a hammer. 2 doji here, acknowledging the support level. And on Tuesday, which is right here, the price did below the low. Let's move. This is Monday. It did below the low. Eh? People sold it down below the low of Monday, but they quickly push it back above the low. They don't want to sell. That's why they bring it by below the low. If they want to sell it, the bear will not allow the price to go back above the low of the previous day. They will do everything to push it below or to close it below the low of the previous day. But it survived it. Okay, they push it back, close there. So on Tuesday, you'll be watching what's going on here, whether it's now ready. Okay, sometimes it may not be perfectly ready on Tuesday, so you may have to wait more. You do not have to take the trade on Tuesday, but very often you will see excellent opportunity on Tuesday. But sometimes you may have to be very patient, which means you say, oh, I thought it's going to set nicely. So you can, all right, I'll wait again. All right. So you will be entering the trade on Wednesday instead of Tuesday. But you were watching it since Tuesday. All right. So you will be watching whether this level, okay, is now converted. This resistance level is now converted into support level on Tuesday. If you have the confirmation, you apply the top-down trading methods, switching from the daily chart, okay, the signal time frame and the entry time frame, okay, to make excellent decisions. And from there, look, you work beautifully, yes or no? This is about swing trading. Take it from A, bring it to B. Take your profit, go back. Look for another financial instrument that are moving, not that stay in one place, that no one is trading. Major indices, Dow 30, Nasdaq 100, FTSE 100, CAC 40, DAX 30, okay, major indices, Nikkei 225, okay, stocks that are listed on the major indices, you want to trade them, okay, using this strategy. You can apply this strategy for forex trading, Euro, USD, pound, dollar, okay, yen, all the currency that are moving, but For forex trading, one must remember the correlation between currency pair and avoid over trading. For forex trading, capital for traders to check www.forexfactory.com. If you want to trade forex and you ignore economy news, you better use your money for something else, all right? Give it to somebody else or give it to charity, all right? All right? So, all right? So you see it now? So applicable for commodity, applicable for stock, applicable for forex, okay? So it's here. So the same strategy, applying the market stable data, validation or support or resistance level. Looking for, okay, signal on Tuesday and using the trading drill and the trading triangle. Is that difficult? It's not difficult, okay? It's not difficult. As I said before, okay, practice will make you a better trader. Keep practicing, keep improving, keep learning, okay? Free video on YouTube, okay? Go and watch them, okay? Learn and learn and learn, okay? And, okay, if you are trading, apply the 5% money management rule, very important. Okay? Use the 5% money management rules, okay? And do not cut corners. So they say that I say too much, do not cut corners, okay? You were beautifully, Johnson & Johnson. The next financial instrument is ExxonMobil. What is ExxonMobil? ExxonMobil is a market leader for the Dow 30. Boeing is also market leader for Dow 30. You know that? Okay? You want to know the market leader? This is about the trading triangle. As a swing trader, go to www.dayprotrader.com and click on Market Watch. Okay? The vertical line here, this is Monday again. We are looking at ExxonMobil on the daily chart. This video is about how to swing trade on a daily chart like a professional swing trader. Okay. I have a two line here. This is another Monday. So we'll start with okay, the first one here. This time, I'm going to combine this strategy with Fibonacci trading. If you want to start Fibonacci trading, you need to go to www.dayprotraders.com to learn how to use Fibonacci, okay? All right, moment please, writing something down for myself. So, we're going to use here the Fibonacci extension. And what I say to traders that understand the flat correlation, traders that go to www.2480wave.com to learn to master the flat correlation. If you are day trader, swing trader, learn to master, okay, the flat correlation. Very simple. I'm talking like this to get your attention, okay? So, here, I want to draw some line on my chart first before I start using Fibonacci. So the price went up from here, yes or no? Even a chart can do that. Say yes, it went down, okay, yes or no, and then it went up again here, and it went down a little bit, just a little bit, and again it went up from here all the way up here. Yes or no? I think we all agree to that. Okay, no one can disagree unless okay, they can't see properly. Okay, so use your glasses. All right. Okay. Now, I want to use a Fibonacci retracement level for this section here because I've done my homework. If you want to use Fibonacci, okay, extension, we'll do the opposite from the, you see. If we were using a retracement, we'll use it from the beginning to the top. If you're using a retracement, we draw it from the top, okay, to the bottom. So I have my Fibonacci retracement here. So the level I want you to remember, traders that understand the flat correlation, know the level, the 138% Fibonacci extension zone. That's it, that's the line here. I'm going to call it 138. See the 138 here? Am I talking about you? Can you read it on your chart? 138. See here, 138% Fibonacci extension. Let's color that line into red. Okay, so the price went up from here. Remember, from here to this level, okay? And then you break above this high, so there was a bullish progression, followed by a little bit of pullback on low volume, and you break above it. As the price going up, the those who understand, okay, the power of 138% Fibonacci extension zone are watching this level on a daily chart. Now he hit it here. Look, which day? Look at the first time he hit it. It's on Monday. You remember the vertical line? It's on Monday. So on Monday, traders who understand that the 138%, you remember what I said to you? Now I'm combining Fibonacci trading with, okay, swing trading, all right? Fibonacci trading and market stable data, all right? Very simple, okay? So what has happened here? This time we are not, okay? This is a hidden, all right? A hidden resistance level. The Fibonacci extensions reveal to market participants hidden support and resistance level. So though the price did not reach this point at that point in time, traders that understand Fibonacci extension levels will draw this line on their chart because they know that these are possible target price levels. These are hidden key levels. So in the first part of this video, we were talking about, okay, breaking above a support level, breaking above a resistance level, and breaking below a support level. And we were talking about the validation of support and resistance level, a real resistance, a real support level that we know already. But this time, I'm using Fibonacci extension level that is exposing hidden support and resistance level. So visible, okay, support and resistance level, and hidden support and resistance level, okay. So here, this resistance level is hidden to ordinary traders who do not know anything about Fibonacci extension. So you have the line there. So on Monday, here, this is a candlestick bar for Monday, the price retested the 138% zone because you already knew that this is a possible, okay, price target zone. You will be looking for convergent signal. Okay, what is a convergent signal? Go to www.stochastic-macd.com. So now, it's a Tuesday. So Tuesday is this candle here. So we have a tall bullish bar that brings the price to retest. You see that very often. The market wants to retest that level, so they push it up. So on Tuesday, you draw the high, the low, and the median line of the candle of Monday, which is the vertical line here. And you will be looking for what? Okay, a bearish, okay, chart pattern because it's a hidden resistance level. And you will be using, okay, your top-down trading method, okay, look using the sector. So you say this is a sector, possible, okay, pull back at this point in time. So you're waiting for the signal. You don't see the signal, don't force it. You see the signal, now select your low-risk entry point. So the following candle, you see that traders sold it. They took profit. In fact, they took profit because these traders know that this is a possible target zone. So they don't want to give up their profit. They take some profit. Day traders can use that for day trading also. So price went down that day on Tuesday. Okay? As a swing trader, you may, if you receive a sell signal, you may select a low-risk entry point to enter the trade. At this point in time, can be aggressive entry. If you are using aggressive entry, okay, so which means it's not properly set, but you want to give it a chance, minimize the risk, and control it. That's what I meant, okay? And don't move your stop loss if you know that it didn't set up properly. Just let it go, okay? All right, so you can see that the price went down on Tuesday, but the following day went up a bit. But this is a bit tricky for some traders because you want to know whether your signal has failed or not. TSCWSYS 008 traders should know, or at least draw your channels and know whether your signal has failed. So price went back above the high. Okay, you have a choice. You may decide, okay, I'm not closing my trend, as I show you trader in some of my live trend. I'm not closing my trend. I'll prefer they take me out. Okay, are you using 40 pip for this swing trade on the edge? Are you using 50 pip? Okay, are you using okay, options, call option, put option? Okay, what tool are you using? Are you using CFD? How do you want to manage this trade? Okay, all right, it's up to you. It's up to you. You may decide to be taken out, or you may decide to close the trade, or you may notice that, okay, you may give it a chance, okay, let it run. You see that it went a bit above it, only to come back down. The price closed here. So if you survive this movement to the upside a little bit, and it closed again with a doji like this, well, you are watching again the following day, which is Thursday now, because you see, Tuesday it went down, Wednesday it went back a bit, but closed here with a doji. So Thursday, well, if you see another bearish chart pattern here, you will sell it again. Or if you were taken out in the first attempt, well, on Thursday, here it is. Come down big time. Down big time. And again, the 1, 2, 3 minimum price move was repeated here, not on the hourly chart this time, but on the daily chart. So if you enter on Tuesday, you sell, you survive it. Again, here another opportunity, you sell, so you just sell. If you sell, sell it. Okay, control it. Stick to the 5% money management rules. Okay, be disciplined. Yeah, down. Hey, now you have a lower high. What's going on here? Okay. All right. So these two candles here, another candlestick bar. Okay, here. So you are watching it. Okay, inverted hammer. So the two rallies, you are watching it the following day. Okay, on the edge. So it went up. Okay, one down big time, one slow move up. Check the volume. Do you receive a sell signal here? Okay, again. All right. Use pitchfork tool. All right, again. All right. Now the channel is defined. So now after this point to this point and this point allow us to draw the bearish trend line. So we choose one point here. We make it parallel. Okay. To the first one. And here it is. You can see people were selling like a crazy, but because of this support level here, you see this support, the bulls annoys the bear here. So people were selling, the bull were buying, but the bear sold them down because of this support level here. They forced them down, okay, before coming out. Okay, you see now? This is one example of combining the strategy that we are discussing with a Fibonacci extension. So we were focusing on this session of the price. Look what has happened recently. Now we are focusing on this price move. Price went up from here to here. Let's move this to the side for a while. And I'm going to use my Fibonacci extension. Again, extension. I want to remove these lines so I can draw my Fibonacci New York is now open. The time in London is 42 minutes past 2 p.m. on Friday, 27. Okay, so I want to see the high of the end of this move right here, and do it properly. Yeah, that's correct. Put it here so I can draw my Fibonacci line perfectly. That's it. That's exactly that. Now, so the first time I draw my Fibonacci extension, I use this session. You remember? The price moved from here to here, watching the 138%. Here it was, price went down. Yes or no? In 3 moves. Now this time I'm focusing on this price move from here to here. So now I'm bringing back my green spots. So from here to here it went up. We are looking for what? 138% to reveal for us the hidden support and resistance level. Fibonacci extension will reveal to traders hidden support and resistance level. Because at this point in time we may not see that this is a resistance level. We know that this is a possible price target using the Fibonacci extension. Okay, now I'll color it also, color this one in pink. Okay, so first one is the red line here, second one is the pink line here. Look, again here we are, and I have again a vertical line. It's Monday, so today is Friday, Thursday, Wednesday, Tuesday. Look at that. This is this week. Huh? Look on the top left corner. Tuesday, June 24th, 2014. Is it nice, this strategy? Yes or no? Are you a swing trader? Okay. Are you a position trader? Are you a day trader? Sometimes traders don't know who they are. Okay, so some trader can day trade and swing trade. I can do that, but deep down, I'm a day trader. Okay, so all the traders they will tell you I can day trade, I can swing trade, which is normal, but they are either day trader or swing trader. They are not 50% day trader, 50% swing trader. They are either 60 or 70% day trader and the rest swing trader, or they are either 60 or 70% swing trader and the rest, okay, they are day trader. Okay, so sometimes I send children that join us, I ask them, are you a day trader? Are you a swing trader? What I'm asking you, do you enjoy more day trading or do you enjoy more swing trading? All right? What do you prefer? If somebody asks you, okay, you say you are day trader, and you say also that I can day trade, I can swing trade. If they say to you, you can't be both, dump one, which one will you dump? So they would say to you, I will dump swing trading, which means, in fact, this person is intrinsically a day trader. Okay? Or if you ask the person, okay, you say you are day trader, you are swing trader, which one will you dump? Okay? The person may say, I will dump day trading. So he is, in fact, a swing trader. Okay? But he's not 100% swing trader, but you will prefer, okay, if they say to you, which one, take one only, you will take swing trading, okay? So look again, so if you are swing trader, or if you swing trade and day trade, okay, it's also valid for you. And here it is, Tuesday, see? All right, a bit of blah, blah, blah for my chart right now, okay? All right, so this is it. So again, you see, this is the pink line, which is the 138% Fibonacci extension, revealing to us a hidden price target. Okay. All right, 1 second, please. And again, here we are on the edge. We will look for a validation on this level as a resistance level. It's a target zone. It's a conversion point. Now we want to look for, okay, a sell signal. Will people take profit here? Okay, will we see a bearish chart patterns? We will now use a top-down trading method following the trading range. The setup is on a daily chart. Okay, now we go to our signal time frame, and then you go to the daily, entry time frame. Okay, swing trading like professional trader. Once you see the setup, you need to go to Google Finance, okay, www.google.com/finance. Now you put in the EPIC, SOM or ESOMobile. You see the economy news relating to ESOMobile. You check it. Now on Google Finance, you click on financial, check the balance sheet, check the cash flow, okay. Do your due diligence. You are happy. Crude ESOMobile is about crude oil. You want to check crude oil also, okay? So this is about the sector, the market, the sector, and the financial. You check the market itself, which is S&P 500, and now you are applying your trading triangle. You are now ready. You want to swing trade, which means you want to remain in the market for 2 or 3 days, okay? All right, 2 or 3 days. So now like this, okay? Today the market open, you'll see people will like to take some profit because Friday it was going down like this. For day trading purposes right now, okay, we can, okay, look for opportunity to buy. If, okay, we receive a buy signal here because we know that the bear, okay, so the big time is Friday now going to their mind, they would like to take some profit. Very simple. Okay, so as a day trader, we can take advantage of that. If I go, for instance, quickly before, okay, okay, my screen is frozen for a while, so but it's okay. You see, so this is it again on okay, Tuesday. Okay, if I go, for instance, to the 10-minute chart for ESOMobile, okay, we want to see what's going on here. This is what I'm showing you now. So they sold it the whole okay week. So the market is now open. It's Friday. There is a high chance that the majority of swing traders would like to grab some profit before, okay, the market is closed today. So we may see a bit of a bounce up, okay, all right. So and the blah 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 blah, okay, all right, okay. So today you see a gap down. So as a swing trader, you are watching it. So in fact, you see, if you want to day trade this, to go into the mind of other traders, what I will do, draw a line like this, and let them bring it here. And if it form a beautiful a head and shoulder pattern, an inverted head and shoulder pattern on the edge. Okay, give it a chance, use the TSTW24 and then take some profit out of this. You need to be careful because the people are selling, okay? But what you are trying to do as a day trader, you are trying to grab some profit while they are about to take some profit. That's all you care about. You want to take some profit when they are, okay, taking profit also. All right, okay. So let's go back again to the daily chart. Okay, this time we are using the 138% Fibonacci extension level to highlight a hidden resistance level. The prior reaches that level. Now we highlight the high, the low, and the median line of the candlestick bar of Monday. We wait Tuesday, and we are looking for a validation of that level as a resistance level. Very simple. All right, we can do the same thing. Also, when we use the 138%, if the price goes down, okay, we can use the 138% to highlight for us the hidden support level, waiting for the price to hit the target level, this is a hidden support level, and from there we'll be looking for a bullish chart pattern using the top-down trading method. Ladies and gentlemen, this is the end of this video about okay, how to swing trade on a daily chart like a pro. In this video, we were using first a market stable data that stated that when the price breaks above a resistance level, one must wait for the validation of that resistance level as a support level before one can buy. We all have also used the opposite, which means that the price dip below a key support level, we will wait for the validation of that support level as a resistance level. But for swing trading purposes, we will wait on Tuesday, highlight the high, the low, and the median line of the candlestick bar of Monday, and we will be looking for okay, a bearish chart pattern if you want to sell, looking for bullish chart pattern on the edge if we want to buy, okay, and we will use the top-down trading method, the trading deal, the setup, the signal, and low risk entry point without violating okay, the trading triangle. This is about how to swing trade on a daily chart like a professional trader. This is the setup, okay? We want to validate the setup, and then how do we validate the setup? We go to the higher time frame. We want to go to Google Finance and Yahoo Finance, check the fundamental, check the economy news, okay? So we do not fight the market. I hope you have learned something from this video, okay, and we'll put into use, okay, to make excellent swing trading decisions. If you want to join us and become a TSTW/SYS008 trader, you need to go to www.stochastic-margin.com and purchase the TSTW/SYS008 trading system. Ladies and gentlemen, one cannot pretend to be a professional swing trader in one day. It will take time. So take time to learn, to practice, to test it, to build your ability to trade. Okay, the focus should be on the ability to trade. Once this is fixed, okay, everything else will follow. Until the next time, enjoy yourself and be very happy. We are the TSTW/SYS008 traders. Speak to you soon. Bon, c'est fait, c'est fait. C'est bon. Time to drink something.